Hello, everybody. My name is Graham Elwood, and you are watching the new and improved Bitcoin Political Vigilante. We're talking Bitcoin, guys, because it's good news. We just had the halving. I have a whole Bitcoin playlist. Check it out. Below is ways to support our show, but we're going to add soon a QRF code or whatever where you can donate Bitcoin to the show, which I appreciate. Bitcoin's the future. And we're going into another bull run because, first of all, the spot ETFs that came in the United States at the beginning of this year in January, one of the reasons that jumped the price from, January of 2023, Bitcoin was trading at about 19,000 and it broke an all-time high of 73,000 in March before, like a good month, 5 weeks or so before the halving, which we just had on April 19th. So I want to talk about there's more good news because Bitcoin is one of the only things where regular people can empower themselves financially and get out of this hellscape rat race where you're just supposed to work a crappy job, barely get by, put yourself into debt to survive. And these credit cards that are 25, 29%, which is, that's criminal. Like the mob has lesser points than you get. The juice, the VIG on the juice is less with the mob than it is with the credit card. So it's another reason to buy Bitcoin. If you buy Bitcoin and hold it, it will make you money. And if you hold it at least for 5 years. I know everybody's financial situation is different and you have to sometimes you have to sell to pay bills or whatever, but man, just buy it and hang on to it. Buy it and hang on to it. The halvings and the having nots. So I just want to talk about more positive news. That's very, very bullish. In the short run, Bitcoin will be volatile. We've seen that. It hit an all-time high in March of 73,700. It pulled all the way back to about 61,000. And today it's at whatever, 65 or something like that. So it's always going to have short-term corrections. Don't worry about that. Don't worry about day trading. Don't worry about technical analysis. Just buy it and hang on to it. Hong Kong spot ETFs to attract $1 billion. This is from Bloomberg. This is the thing I've been talking about actually for 4 years. The more institutional money that comes in, the higher the price is going to go. Now, some of you might go, oh, Graham, we don't want these corrupt banks coming in. That's coming no matter what, which is why I'm like, buy some of this so that they can't. There's only will ever be 21 million Bitcoin mined ever. That's it. That's it. There will never be more than that. There's only 20 million in circulation, which means there's only 1 million that will remain to be mined. And every 4 years, it gets cut in half. Okay? So let's read this article. This is a good thing. So Hong Kong poised to become a leader with its new spot Bitcoin and Ether exchange traded funds. Again, I'm not a fan I'm not a fan of the ETFs because it's an inferior product. You're basically buying a paper certificate that says you own Bitcoin when what you should do is go to like Swan Bitcoin, buy it, put it on a cold wallet, and you're done. But as has been said, I think Max Kaiser said this on my show, they're useful idiots. They'll bring institutional money in, which will drive the price up. All the more reason for you to buy it and put it on a cold wallet. Anyway, the ETFs, but now they can fare up against the U.S. peers, which have drawn more than $28 billion in the first 3 months. Bloomberg ETF analyst Eric Bauhaus has updated the projections, now estimating these ETFs could attract up to $1 billion in assets under management within the first 2 years of operation, doubling its previous forecast of $500 million. Hong Kong was, one of the early adopters of Bitcoin, and I believe Singapore, but they get tangled up into the shit coins. Like, don't do that. Just buy Bitcoin, guys. And I used to be a proponent of altcoins. I used to think, and then I learned the truth. Don't mess with them. I mean, you can. It's just they're very volatile. They're way more risky and scammy. Just buy Bitcoin. The optimistic forecast is tempered by certain regulatory challenges, particularly affecting potential investors from mainland China. As Bao Kunis, or whatever his name is, detailed on Twitter, mainland China investors probably won't be eligible to buy Hong Kong listed spot Bitcoin and Ether ETFs as they are barred from buying virtual assets. Now, the country of China has tried to block Bitcoin numerous times, but people use VPNs and use it anyway. The statement was based on insights from Rebecca Sin of Bloomberg, who emphasized that while retail investors from mainland China could theoretically utilize their $50,000 annual remittance quota to invest in these ETFs, the channel remains largely underexploited due to regulatory and practical complexities. For institutional investors, the prospects are even more stringent, with little likelihood that the qualified domestic institutional investor quota could be approved for virtual asset ETFs given the current regulatory environment. Now, China very heavily regulated. Hong Kong is legally a part of China. People that are Hong Kong, they call themselves Hong Kongers. They don't consider themselves Chinese, just to give you a little political background. Despite these limitations, the introduction of spot ETFs and Ether ETFs represents a significant milestone for Hong Kong's financial markets. Sin further clarified the broader potential impact, noting, quote, Hong Kong spot Bitcoin and Ether ETFs could gather as much as $1 billion in assets under management. However, achieving this target heavily depends on the rate of infrastructure improvements and the expansion of the ecosystem supporting these digital assets. Currently, the total assets under management for Bitcoin ETFs across the Asia-Pacific region almost amount to 250 million, shared among 5 funds based in Hong Kong and Australia. CSOP Bitcoin Futures ETF currently stands as Hong Kong's largest Bitcoin fund, launched in late 2022 with 121 million in AUM, assets under management. The management fees for the new ETFs are projected to range between 1% to 2%. For comparison, existing Bitcoin futures ETFs and Ether futures ETFs charge 2% management fee plus an estimated additional 2% in other expenses. In contrast, Samsung's Bitcoin ETF offers a lower fee structure of 0.95%. What that means is somebody already has a bunch of money, assets under management, and their asset manager is going to say, hey, we can move your money out of this other thing into a Bitcoin ETF because the fees are lower. That person's going to go, yes. And more than likely, because the price of Bitcoin keeps going up, they're going to say, yeah, let's do it, which puts more money into Bitcoin, which drives the price up for all of us. Eric Balkunas also highlighted the broader implications for Hong Kong's role in the global ETF market. Now, for some good news regarding Hong Kong, our asset estimate is now $1 billion in the first 2 years, which is a healthy IMO, but still nowhere near the $25 billion that some have said. But a lot depends on infrastructure improvement. We also think this helps Hong Kong as ETF leader, Asia region has tweeted. At the time of press, Bitcoin traded at 62,400. There's where we're at right now. Crypto casino, boys. All these shit going, just buy Bitcoin, guys. So overall, that's bullish news. The more people that adopt it, the more institutional money that comes in that drives the price up, which is good for all of us. It's good for all of us. When Bitcoin dropped a little bit last week to 61,000, I buy the dips when I can, even if it's just a small amount of money. Whatever you can afford, buy a little bit, put it on a cold wallet, hang on to it, because that is what is happening. Let's check the immediate price right now. It is 6:01 p.m. Pacific Standard Time on Monday, April 22nd. Bitcoin is currently trading at $67,104. Shazam! Boom. It's already gone up $2,000 since Friday. Friday, right at the halving, it was around 65,000. See what happens when the halving happens? The last halving, it went up 8x. The halvings prior to that were at 10 and 20x in a year. So a year from now, if Bitcoin just does an 8x, want to just get out a calculator, kids? Let's get out a calculator. So it was at 65,000 on Friday when the halving happened. So let's do 65,000 times 8 equals $520,000. Let's say it just does a 4x, $260,000. That's on the low end. If it does half of what it did at the last halving was in May of 2020, Bitcoin did an 8x. It was about 8,000 and it went to 69,000, which was an 8x. So if we do half of that, a 4x is $260,000 in the next year. From May of 2020 to April of 2021, it went from 8,000 roughly in there, 8 to 60, 68, 69,000, which was the last all-time high, which was broken last week. And again, for those of you that are new, you can buy as little as $10 of Bitcoin. You don't have to buy a full coin. People think, oh, it's $65,000. I don't have $65,000. You don't need $65,000, right? For today's price, $67. That's 1/10 of 1%, right? 10% would be $6,700. 1% would be $670. Yeah, 1/10 of 1% is $67. So let's do that. 67 times 4. If you buy $67 today, it'll go up a minimum of it'll be worth $268 tomorrow, or a year from now. If it does a 4x, if it does an 8x, it'll be worth that much. Well, just saying. And the election, meanwhile, the election in America will be nuts. Things will go through the roof. Yeah. The election's going to be nuts. US dollar could collapse. We're on the brink of World War III, whatever else. Like America, it looks like it's going down hard, and you want to own some Bitcoin and have it on a cold wallet. Thanks for watching, everybody. Follow the money, connect the dots, get the truth. Shave your knuckles for justice, and buy Bitcoin. Ba-boom.